We are good. Well, it's not my fault Connor's avoiding taxes.
Hey, tax avoidance and tax reduction are two different things.
I think avoiding and evading is the subtle difference that'll get you arrested.
On your STRC shares, though, that you just bought, you don't have to pay tax until you sell them. So there you go.
I don't have to pay tax full stop. I don't care about selling. What are you talking about?
All right, what's up, everybody? Welcome back to another week. Again, Conor was able to join us again this week, unfortunately. So the whole gang is here, and we got some good stuff to talk about today. Obviously, there's a lot going on. We had a big old moment a few days ago with SK Hynix that kind of brought the stock market down. We got some Iran stuff going on. We got Micron Earnings today. STRC had things going crazy. There's a lot to talk about today. So why don't we just go ahead and get started? Sam, do you want to talk a little bit about kind of what kicked off the week with the SK Hynix situation over in South Korea?
Yeah. Well, I saw a couple different reasons why Micron and SK Hynix were falling down. One thing that I didn't even talk about in my video, apparently South Korea is discussing like an unrealized stock tax, a stock gain tax, which we've talked about that in the US before too, but it's causing some people to take profits, I think, and maybe book them ahead of that, or just, they're just taking profits because the whole, what do they have, the Kispy or something like that? They're basically their S&P 500 is up nearly 200% this year. So it's up like a 3x. Imagine if the S&P 500 all of a sudden was at like 23,000 from 7,800 right now. That's basically what they've been going through with a lot of leverage. But then also with the SK Hynix, there's a report that came out that they were going to focus more on DRAM memory rather than HBM memory, which is like high bandwidth memory, is just more specialized for AI, which in theory should have better margins and is more difficult. But apparently the ramp of Rubin at NVIDIA, which is like their new AI system, is going slower. So some people were concerned maybe there's not as much spending on AI and on AI through the major hyperscalers. But their reasoning behind it apparently was just that they're getting 90% margins on DRAM, which is easier anyways because there's so much demand for it. So I don't know if you can really take that as a negative thing, that like this company just makes, $9 on every $10 that they sell. So they're going to stick with that when it's easier anyways. But that was kind of the worry, I think, of the market. And I think just generally Micron has been up so much that people are just taking profits. But what are your thoughts on it?
I agree, bro. Like, it was one of those things to where I actually saw the report because, funnily enough, I don't remember what I was doing. It was like 2:30 in the morning and I was trying to fix something because my dogs were freaking out. And I saw the report like come across on one of my apps. And so I read it. And it was one of those things to where I understood why you could take it as a negative, right? Where it's like, okay, they're going to slow down production of their HBM4 chip. And so people must be spending less money on their HBM4 chip because they don't need to produce as many. But they said the reasoning. They were like, when it comes to our DRAM, we have higher margins and we see an opportunity to scale in that to increase our revenue and diversify out our income streams. That is quite clearly what they said. But the market was like, nope, that's not what that means. That means that you're not making as much money from your chips, so everything has to fall. But what's crazy is that it immediately fell 10%, the Kospi. It tripped the circuit breaker twice. So everything started just backfiring. So then the whole South Korean stock market crashed 10% out of nowhere. And then it caused Europe to start seeing like ASMI and all those ones start crashing as well. Then we wake up yesterday morning and then we're crashing. And I'm just like, I think it goes to show how tense the market is right now when it comes to this whole AI thing, because something that isn't even objectively negative caused South Korean stock exchange to crash 10%. It's just ridiculous, to be honest. Like,
Yeah, I can't imagine like how people would do here if all of a sudden they woke up and they're like, oh, I'm down 10% today on my 401k. Like, can you imagine how upset people would be? But yeah, I mean,
I feel like they will be though, won't they? Like that's going to happen. Like I feel like that's the reality. Like, I mean, I have no doubt in my mind that we're going to see that sort of move in the US stock market, like for sure. Like this market's crazy. Like we're being propped up entirely by the AI trade right now. Like the hyperscalers are down 16, Amazon, and 30% Meta and Microsoft. Like the only thing keeping the Nasdaq and the S&P up right now is the AI trade. And I'm not saying it is a bubble, but it is going to go down like a little bit, right? And then people are going to lose their mind, and it's going to go down a little bit more, and then they're going to lose their mind, and it's going to go down a little bit more. And then guess what? I'm going to load up the truck.
Yeah. Well, and also the thing about it too is like, I feel as if maybe 10 years ago, if we would have seen, say, a 5 to 10% correction, even over the course of 24 to 48 hours, the whole world would like almost explode. But the truth is that you can see something like the Kospi fall 10% because it's up like, how much did you say, Sam? Like 200% over the course of like 12 months. Yeah. So it's one of those things to where this market is becoming more volatile. So I feel as if in this sort of point in time we're in right now, you're just going to see larger corrections. It just is what it is. I'm just curious on if it goes back to normal. Like, does it start to revert to a point of neutrality? Because remember, 1999, 2000, 2001, it was the same thing. The market was all over the place, big pumps, big dumps. But then as it started to kind of cycle correct, you ended up in a position in which you saw it go back to more of just a traditionally slow and steady state. And I'm curious to see if this sort of volatility that's in the market just keeps going. How long does this keep going? Or do we resort back to normal at some point?
I think semiconductor stocks make up 18% of the S&P 500 now. So that's crazy, NVIDIA's, bro. AMD's, and that I don't think that accounts for whatever market cap in Google and Amazon is attributed to their chips as well. So it's probably closer to 25% or something like that. So yeah, if you saw a 20% drop in Micron and SK Hynix and NVIDIA in a day, that'd be a 5% drop for the overall market, plus whatever else fell through because people are just throwing the baby out with the bathwater. I mean, we have seen 5 to 10% moves even in the last couple of years with tariffs. I think we had a big drop over one day. Then I think even this year at some point we had just a couple of weeks ago we had
Nasdaq was down.
Nasdaq day.
The Nasdaq was down 5% like 2 days ago.
Yeah.
Literally 2 days ago. It was 4.9%.
Was it 2 days ago? Yeah. And I feel like there's so many good opportunities outside of the AI trade right now. Like the companies that have been trading at 80 price to earnings ratios that turned profitable a couple of years ago. I'm thinking Uber specifically now. Uber is actually up 6% because it came out. Pelosi bought it. She bought like $1 million of it. But
buy everything.
Yeah, this is something that I've been I started positioning over the last year, and it's like a 24 price to earnings ratio now or something like that. Netflix is around 20 again. Microsoft is 20. These are usually 30 to.
Bro, Meta is under 20. Meta's like 17, 18 now. It's cheaper than the S&P 500.
Yeah.
That was what I was talking about in my video today. Like, it's insane. Like, I'm gonna keep buying this.
I just struggle. Meta's the one. You guys always talk about Meta, and it's just the one that I struggle with by far the most. Just because they're spending so much money, it's just hard for me to rationalize it. You know what I mean?
Yeah, but I hate Meta. Like, I hate Instagram. I hate Facebook. I hate Meta. But you cannot ignore the fact that it's like the revenue is insane. Like, I used to do e-com, right? And my profit margin was 15% on a product that was like, insane. Like, my margin was massive if you remove the ad cost. But almost all of the money goes to Meta. And that's just one small part of their ad business, right? E-com guys like I was. Imagine how much money they're just printing. And then their CapEx they're spending, right? They're like today, I think today or yesterday, there was a news article about them coming out and either acquiring or starting a prediction market. And like, that's right, Sam, it's prediction market, yeah?
Yeah.
But it's like they're just like, the thing is the way I see Meta, right? I don't like Instagram, don't like Facebook. Yeah, but I have to ignore what I like, and I have to understand these are cash flowing and like behemoths. And remember, Facebook bought Instagram. All right. So it's like he's just going to continue to do that because of the amount of money they make. So whether or not this prediction market turns out to be anything good or not doesn't matter. He's just going to keep buying things until they work and keep taking away. Like I might not like the fact that he just copies Twitter and creates what is it? Threads. Like, I don't know if that makes any money. I don't really know about it. It's rubbish. I don't use it. Right. But that's going to keep happening. And I think that as a business model, right? Morally, yeah, you can think what you like, but bro's cash flowing and growing, and everyone hates him, and the company's down 30%.
I guess
right?
I just need to see if the CapEx actually leads to growth, like outsized growth. Because right now, I don't know the numbers, but if I had to guess, they're going to spend more this year than they're going to make.
It's like 125 to 145 billion.
Yeah.
On what sides?
What?
Sam will know that.
Which one's 140 billion?
I don't know. They're all between 100 and 200, but yeah, I think Meta will spend more than they make. Yeah.
So then the question is like, okay, how do they pay for that? That's the whole thing. Are they going to follow the Google route? Like,
if you're in growth, you want them to do that, right? Like if you're in value, if you're in the SCHD, if you're in like Coca-Cola, you don't want them to spend more than they're making, obviously, because you want them to keep paying their dividends. But if you're in growth, you absolutely want them to spend all of their money, if not more, to be the leader in the space. And if anyone's going to do it, it's going to be Amazon, Meta, or Google. Maybe, sorry, Microsoft. But maybe it's also Google, maybe it's Apple. But like those three at the start are what I've chosen. Do you know what I mean? But it's like, that's what, like, I agree with what you're thinking. But then as we, like, you know, we always discuss, I agree with you, and that's why I hold a small part of my portfolio in dividends, right? That's why I have Berkshire Hathaway. Like, I have hedges against these bets because I'm like, yeah, I like the idea, I like growth, but maybe they mess it up and it goes to zero. Obviously, that probably won't happen, but I think in like crypto logic, right? Like, oh, a nice bet that doesn't make any sense. Retailer selling it. This seems like a good opportunity. I'll put money into that. But I'll also put money over here, high yield savings account, dividends, Berkshire Hathaway, because if this goes to zero, this isn't going to zero, right? That's kind of how I think about it. Even though it's not going to zero, I'm not saying that's going to happen, but that's how I hedge it in my mind. I
think of it as they're like one of the best investors of all time. I mean, they're one of the best companies of all time. Obviously, they're over $1 trillion market cap. But say like Tyler, let's say you made, I don't know, let's say $1 million a year. So you're like a really good business person. And then all of a sudden you had some cash sitting around and you find an investment that is worth putting $1.5 million in, or like whatever, plus your cash, plus you're going a little bit in debt. Like, I think that's just a very high conviction trade. And you wouldn't make that just like on a whim. Like it would be like something that you see a huge ROI on, and they have a lot of metrics that they can back up. I mean, you can already see the revenue growth increasing. Like it's going from 25% to 33%. And they can always turn that off too. Like the market hates them right now because they're spending so much money. They had the big lawsuit with kids, which kids barely make any other revenue because they don't like contribute to the revenue. And then like the company culture, everyone's calling it terrible because they're like tracking keystrokes and stuff like that. They just said that they're going away with that. I also heard that they might get into long form content. Like they already have billions of people that use their apps every day. Like imagine they start with a show or something and they start a streaming service. Like they could have 200 million users, 5% in a year or something like that.
Yeah, so, like he could just copy Netflix.
Yeah.
You know what I mean? Like
10 shows.
Well, I think when it comes to Meta, so I am like, there are two pieces of the story with me. I'm just a skeptic. I'm not saying I don't like it. I actually really like Instagram personally. It's just more that I'm skeptical of the sort of return it has. But the positive side of Meta to me is what you just said, Sam, and the fact that they can, in theory, just turn it off. Because it's not as if all of this CapEx is going towards building out this infrastructure. They're not trying to copy what Amazon's doing. They're not taking that approach. They're simply spending a lot of money right now to boost up their own profit margins through operating efficiency and all that sort of stuff. And they can just stop doing that at some point, or the infrastructure can be built and then the residuals come after that. I completely get that. My whole point is just like, I want to see that because there is that piece of me that feels like what made Meta great was they kind of in some ways pioneered a lot of things. Whereas as of recently, it feels almost as if they jump on every bandwagon too late. You look at the metaverse, I'm not going to say late to that because there is still a world in which that works out, but I don't see that happening anytime soon. Same thing that Conor said with threads. The same thing now with long form content. I'm like, and the same thing goes with AI. It's, Meta wasn't really on the AI wave until everybody else was. So to me, it's one of those things like, why wouldn't I go with a pioneer of a space rather than someone who's trying to catch up constantly?
I agree with what you're saying to a certain degree, but there's two parts. One is, off the top of my head, Threads, Metaverse. So Threads, Metaverse, WhatsApp, Instagram. Those are recent things. And Threads. Sorry, I already said Threads. Let's just say those four things, right? 50-50 goes to zero, but 50% are literally the biggest apps on earth.
Yeah.
Those are bets. Do you know what I mean? And those are exactly the sort of bets I want the growth side of my portfolio to be making. So that's one point. And the second point is, I would never in a million years be talking about this if Meta's price wasn't down 30%.
Right.
So like everything you're saying is the reason we're down 30%.
Yeah.
And it could go down 50% from the high, maybe even more, right? But you don't get a company like this being down this much without that skeptical thought, right? Because that's what the market is pricing. They're saying, okay, this AI spend is going to be another Threads. It's going to be another metaverse, right? And it may very well turn out to be like that. But if you actually think about, what do I want from the growth engine of my portfolio, right? I built my portfolio on the barbell method-ish, right? The methodology-ish. And from the growth side of my what I call the barbell, right? I have stability on one side and growth on the other side. But from my version of it, in my growth, I exactly want that. I want there to be people to have the opportunity to say, this is the reason why I think this is a bad bet, right? Especially when we're already down 30%. I want the leader of that to be going, okay, we're going to buy the next Kelshi, or we're going to create the next prediction market, because he sees every time there's something that's happening in the market. Right now we're on prediction markets, right? He sees that, all right, I'm going for it. When Meta was there, I'm going for it. And maybe he's already too late to prediction markets as well, but he wasn't too late to Instagram. He wasn't too late to WhatsApp.
Right.
And let's see, it's like,
and I don't think it's a bad idea to buy some. I think Facebook has shown, or Meta, god dang, I hate doing that, has shown since they've IPO'd, if you hold them long enough, you'll usually be in a good spot. You know what I mean? I just struggle in the market that we're in right now to not see other areas of opportunity that make me ignore Meta. That's more of what I go through. But I also have exposure to Meta through my S&P 500 position anyway. So it's just one of those things where I have to rationalize, do I go add this and get additional exposure in my portfolio to Meta? And I'm like, no, like, why would I? You know what I mean? But speaking of something that is on the flip side of that has been running like crazy, we have Micron earnings coming up later today. By the time we post this, it'll probably either have just happened or happened a few hours ago or about to happen. But that's interesting. I don't know if you guys have been keeping up with all the kind of the Micron lore recently, but I am 100% convinced that what happens later is going to massively impact the market for what honestly could be a few months, a few weeks. Like, I think there's a very real world in which if Micron comes out and underperforms, I think that could be horrible. Because think about the comparison, right? Like SK Hynix comes out, they say something that's kind of maybe could be taken bad, and everything starts to break. Think about, you take a Micron and they objectively come out with something bad. And I get it. SK Hynix is still the largest leading producer of these memory chips and AI. It's much bigger than Micron in that capacity, but still Micron has a higher market cap than them. So I don't know. Sam, are you watching this?
Yeah, I think that this quarter, obviously, like what they're reporting on, will be a very good quarter because they're reporting at the very end of the month. They're reporting first quarter numbers, and last quarter they reported on the 18th of March. Mm-hmm. So they already knew basically what their quarter was going to look like. The last 5 quarters that I can see, they beat earnings every time. They beat last quarter by 33%, the quarter before that by 27%, 6%, 22%, 9.1% on EPS. So I think chances are they're probably going to beat again. Yeah. They're expected to have around $20 in earnings per share. So I wouldn't be surprised if it came in at 25 even, or 26. Yeah. That'd be a 30% beat. But the question is guidance.
Yeah.
It seems like from everything I've seen, they still have a lot of demand. But yeah, obviously this will drive the market, I think, until the next, maybe the hyperscalers announce earnings. NVIDIA's end of August, from what I can see here. So we'll have hyperscaler, Meta, Google, Amazon probably before that, and they'll give some indication as to what they're going to spend on CapEx, which will give us an idea for like how Micron will do in the AI trade. But yeah, I think this will drive the market. We've already seen NVIDIA pull back recently, like we're at $200 now.
Yeah.
So there's some caution going into the earnings, which is to be expected. But yeah, they'll know exactly what they're going to make basically this quarter. So their guidance will be indicative of what they've just done, what they've just finished.
Right.
But it still could be low, right? They could say, maybe they come in at $25 per share this quarter and they say 28 next quarter, and that's really like 32 or something.
Yeah.
Because they like to guide under. But Yeah, I think all eyes are on Micron today. It's really the only big earnings this week, or the biggest earnings. But yeah, I mean, there's no question, like, there's going to be volatility after they announce earnings one way or the other, but the underlying business is doing fantastic.
Yeah.
The thing that I've been making a lot of videos on my second channel about Micron. Like, I like looking at it because it's one of the most interesting stocks in the market, regardless of how you feel on it. But it's not got enough. Like, I don't feel comfortable enough in it to build out a big position because it's so one way or the other. I don't see anything where it goes up 10% for the next 5 years. Like, it's either you're going to double your money in the next few years or it's going to get cut in half.
Yeah.
So yeah, I just don't feel comfortable in it compared to something like Meta, which it grows at 20% a year, regardless of what the stock price does. The underlying company grows significantly, and Amazon and Google, like all these, I think are at pretty good prices. So I'm just not trying to bet the farm on something that's so volatile right now.
Well, it's a trade. It's in trade territory now, right? Yeah. Like, I feel like these stocks bounce between trade territory and investment territory. I would say Meta, for example, is in invest territory. This is when you can actually invest, buy a piece of the company at a good discount. And I'm not telling you people to do that. Sam is. He's a financial advisor, not me. But SoFi is another example of a company that I actually think as an investment could be a good shout. Whereas if you're looking at something like Micron, you can't reasonably say I'm buying a piece of this company for a good discount. You can't reasonably say that. So the only reason you're buying it is if you're looking at it as a trade. And I guess it just depends on if your risk profile aligns with you trading or if you're just long-term investing. But I agree. I mean, I'm not buying any of the Microns or AMDs at this stage. It just doesn't. There's other opportunities in other places for hated sectors, in my opinion. But
I just think most of the market would be way better off thinking the way that I think all three of us feel. And like, I am significantly uncomfortable with anything that moves like that. I actually don't care that the business has great fundamentals and has great forward earnings and has great contracts. I just, like, for me, I don't care. I am not messing with something that looks like that as an investment. Like Tyler's saying, I literally have a futures position on Micron open right now because when it pulled back, I entered it, right? But like, my concern is I just don't want this situation. And it's gonna be like, maybe this is just like, this isn't even close to the top. Maybe there's like a however much more percent to go. But this AI trade will be the thing that happened to all of us in our first crypto bull run. It will be. People will get in too late. I'm not saying now is too late or now isn't too late, but this is going to wreck so many people because there's so many people with exactly the same opinion. And the opinion is AI is the future and it will work. But they don't realize that even if AI is the future, it doesn't mean that, for example, Micron will keep going up. The price might not keep going up. The price might be at its high now, and 10 years later, it's a very similar price to it is right now, but it crashes in between, it pumps in between, right? So as an investment, if people could just look at the AI trade and they understand fundamentally their entry reasoning, is it a trade? Is it an investment? That's going to save so many people. So for me as a price action guy, like it makes me so uncomfortable. And I want Micron to crash. I know that sounds horrible, but like I want it to crash because it's too much. Like this sort of, because the more it doesn't crash, the more, like, it doesn't make any difference to me. Doesn't make any, like, crashing will actually lose me money because I'm in a long position. But the more we continually make all-time highs, it's like the exact opposite to what's happening with Bitcoin. The more Bitcoin continually goes down, the more people say this time is different and it is dead. So convinces them, capitulation, they sell and then rocket. It's the same thing that happens every time. And that same thing is happening now on the AI trade, and Micron being one of the dominant figures in that. Every time someone like me says, oh, it's too high, it makes me uncomfortable, I'm not buying it, right? They buy it and they feel vindicated because it goes up. And then this cycle just repeats and repeats and repeats and repeats and repeats until it doesn't. And then where it doesn't is because most people, like, maybe now I'm too early in saying it's too high. Most people haven't found it, right? The general retail market maybe hasn't found it. I don't know. But it's going to get to the point where so many people are in, and because so many people like me and whoever else says, oh, don't buy, like you guys, whatever, how many, right? They feel like, oh, they're idiots, I'm a genius. And then boom, everyone gets another, right? And I fundamentally believe that will happen.
And what'll be interesting is where the neutrality is, right? Where does AI fit into the stock market at its most neutral point? In the sense of what percentage of the stock market should AI reasonably have control of? What percentage of the S&P 500 should AI be? I don't really think that's an answer that any of us have the question to, because realistically, what if right now is neutral? What if we've seen AI bring a whole bunch of new value to the world? Right? It generates obviously a ton of revenue. And because of that, you started to see a bunch of these different AI companies enter into the top 15, just like tech did 25 years ago. And they belong there. What if they stay there? That's kind of the thought that I struggle with a bit. When I'm trying to figure out, is AI a bubble? Is it too high? Because my thought just comes back to, what if this is neutral? What if they make such a massive difference to the world that they should reasonably be within the top 15? And maybe you see Micron jump. Maybe you do go into that ridiculous moment where Micron sends to like an 1800 or a 1900, and then it does crash, but it comes back to where we are right now, right? That's still possible, because I don't know what is the fair value of AI in the world. I don't know.
That's exactly what I mean, though. But do you know what I mean? The majority of people, they're buying it because of the price action.
Yeah,
like, so there's this full crash that I'm talking about may very well be from 2000 back to 1000.
Right.
I'm not saying, I'm not going to Tom Lee it and tell you that this is the top and I know where the top is and the bottom is, and in 1 month from now we will be at X. No, I don't know. But it's just the worry of that. But I agree. I think that AI is going to be a massive thing for our future. And maybe Micron is a perfect and brilliant investment right now. And in 10 years, it's significantly higher. Maybe that is the case. So if you're buying Micron today, please buy it because you have a thesis behind it. Do not buy it because the price is up. That's it.
That's opposite.
Because I don't want you to get wrecked. Like, I really don't. Like,
just by the hyperscalers, they're at 20 P's, growing at 20 or 30% a year. I'm looking at, like, I know we are interested in dividends. Like, the three of us all like dividends, but we don't really invest for them.
Right.
But like, you look at something like Microsoft or Meta, Google. Like, let me see if I can show my page.
Bro's going to bring up a 0.5% dividend, and I think
I am.
Try and get us excited.
I'm going to show something else.
Bro's about to show Nvidia, guarantee.
Bro, I want 11.5% minimum.
This Microsoft pays 1%. It'll be a little bit more than 1% because they're on their 4th quarterly dividend of the same size, and then they up it. So it'll be a little bit over 1%. But when we look at the trailing 12 months, they have $70 billion of free cash flow. So this is after CapEx. They still have $70 billion left over. They spend a lot of that, like basically 2/3 of it, on share buybacks and dividends. If they wanted to, and they stopped spending so much on CapEx, let's say instead of $100 billion over the last trailing 12 months, they spent $30 billion. They would have another $70 billion in free cash flow, which would be $140 billion, which is like 5% of the market cap. They could pay a 5% dividend yield right now if they wanted to.
Mm-hmm.
And they're still growing. Even if they stopped with their massive CapEx spend, they would still grow, I'm sure, 10% a year or something like that. So after another 6-7 years, they pay a 10% yield on cost. Like, all these hyperscalers are like this. Like, they could be paying 3 to 5% dividends, and they're actually growing quickly. So, you know, you put this off for another 5 years and you grow another 100% revenue, which isn't crazy. Like, Meta has grown since 2020. I think they've 2.5x their revenue. So, like, you could realistically get to the point where they're paying 3-4% dividends in 5-10 years. And it's like, you just have to wait for that, because eventually they'll make so much cash, especially from their cloud business. Like, they'll have so much that they won't know what to do with it, and then they'll issue. I mean, we already see small dividends. Microsoft increases their dividend by 10% a year, though, and they're paying a 1% dividend, which doesn't sound like a lot, but still, that can add up pretty quickly. So, again, I think these are like the safest stocks with the deepest moats that can put money wherever they want, that are going to beat out every new tech company because they can just go buy them or recreate it. They can do threads and then, like, be late and still just shove it in Facebook, and then people will come over. Like, it's just so easy.
Yeah, quick question on that, because I'm actually curious. I don't think I've ever asked you guys this before. What do y'all think about dividend investing?
I was hoping you were going to come out with some serious left field shit.
No. I guess the reason I think about it, if a buddy of mine came to me right now, say he had $5,000 and he hasn't invested, and he was like, should I dividend invest or growth invest? I don't think I would say that he should dividend invest, just because I feel like dividend investing almost serves a different purpose than I don't know. I don't know how I feel about this. Would you, average viewer who's watching this right now, growth/value investing, focusing on price appreciation or dividends? Which side would y'all lean on?
I can give you mine, but
yeah, go ahead first.
It all depends, one, on your age, right, and your risk profile. So like if you're young, right, no, I wouldn't even bother with dividends. However, if you're young and extremely scared of risk, which is completely reasonable, it's a completely reasonable position to be in. Like, you know, you always hear people say, well, if you're 19, you got all the time ahead of you. That doesn't mean I want to lose my 5K. You know what I mean? Like, I don't care. I could have 200 years ahead of me. I still don't want to lose my money. So it's completely a reasonable position to be risk adverse. Like, I don't like risk. I don't want to take risk. So the person who wants exposure to the market but doesn't want risk needs to also understand that that doesn't come with a massive growth proponent. And I think a lot of people, they start at dividends because it feels comfortable. They, you know, that's where they invest first. Oh, I get a 3%, a 4%, whatever. That's nice. And then they realize, wait, let's say it's 10 years later, and they're like, oh God, I should have just bought the S&P, or I should have just bought the NASDAQ, right? For me and my portfolio, I break it up. Somewhere I would put 5 to 25% in dividends. I don't. I think it's 5 or less, maybe 2 or 3%. But it's simply there to have money that I basically know is going nowhere. And on top of that, I have a little bit of income, right? It doesn't even matter. It's not really relevant, the amount of income. But what is relevant is what that does to my psychological state when I'm investing in something like Meta now that has the contrarian take, right? Or has the you know, what you were saying, Tyler, that has worry around it. There's risk there. So in order to take risk, I like to have the backup. And that's where I think dividends fits into a portfolio. So your age and your risk profile, and with those two in mind, that's the amount of dividends in percentage of your portfolio. Maybe it's 100%, maybe it's 1 or 2%, right? Just for the psychological stability. Like, I know my dividends aren't going to grow, but I know that money isn't going anywhere, right? So
yeah.
Yeah, I think from a tax perspective, it's a little bit less efficient to get paid dividends.
That's fair.
But honestly, for most people making $50,000 a year, if they're investing 5%, like, it doesn't really make a big difference. Maybe it's $50 or $100 of tax at the end of the year. There's definitely a dopamine hit from getting dividends, which I think is addictive, which is good. And you're probably, like, a new growth investor is probably going to underperform a new dividend investor, because the growth investor is going to buy like some hyped up thing that they don't know what it is, and then they just haven't spent enough time in the market to just go buy the boring tech companies. Like, that's how most people outperform at the end of the day, consistently. So if I had someone that approached me, I'd say throw that $5,000 into an index fund, VOO. You'll get some dividends, but then like spend some time actually learning about the market, and then you can decide, like, maybe you want to put in $50 a week or something into a portfolio, either dividends or growth, depending on what they're interested in. But throw that in extra. You'll start paying attention to the market more. Throw the rest in the index fund, and then you won't make a big mistake where you lose all your money. You get annoyed at the market, leave for 5 years, and then realize you're 30, and then you have nothing in the market anymore. It doesn't have to be all or nothing. I like dividends a lot. Like, I still have a portfolio that I set up in 2020 that I put a couple $100s in every single week. It was $100 at first, but it's approaching 6 figures now. And I've had the feeling like I should pull it out and put it into other things at different times, but I just forced myself not to. And yeah, I make a couple $1,000s a year, but I've changed it from like Pepsi and like those types of boring companies that I think really don't have much growth to, like, you know, a large Google position, a large Microsoft and Meta position. They all paid dividends, but it's more focused on companies that are in good, like, at good prices that might happen to pay a dividend, but it's not focused on dividends. And I say that, you know, new growth investors get sucked into traps. New dividend investors do the same thing. They look in, they see some 7% yield, and they're like, I should put money there. And they don't really understand that that's oftentimes a trap, that there's a problem with the company if it's paying that high dividend yield. So yeah, I think it's very person dependent, because some people can just be a degenerate and throw everything into one stock and then like lose it and then pissed off. But
that's fair.
Yeah, I want more in dividends. Like, I constantly look at what I'll make every year in dividends. I've been reloading the VOO page to see what this month's distribution is for like the last 2 weeks. Because it'll be a significant distribution to me. Like, probably
Sam,
half what we spend a month.
I don't know if you know, but there's actually a pretty good dividend stock on sale right now.
Oh God.
What is it?
Must be
it's something along the lines of Stretch. I don't know, ST something. Like what I've personally heard is like the effective rate at the time of recording this is around 13.5%. 13.5%. If I put all of my money into that,
you might lose 13% today, but over the next year, you'll get paid 13% in dividends.
Back, yeah.
Okay, so the interesting thing, right, is you're correct, but also you still get 13%. If you buy it today and it goes down, unlike a lot of things, it's different because Stretch pays it.
Give me $1 million and I'll give you 150,000 back for the next 3 years, and then I won't give you anything back because it will go down to zero.
That's a good deal.
That
for Sam.
That's essentially what could happen to STRC if it goes down to zero.
I bring this up, guys, because I bought loads of Stretch the other day.
And now you're down on it after being up on it.
Should y'all maybe explain like super quickly what that is for the people watching?
I'm currently down.
Do you want to hit on it, or do you want me to, since you're pulling it up?
Oh, it's down 5% today. Oh my God.
Bro, you're gonna get 13%. Who cares?
Yeah,
guys,
you get 1% a month, dude.
I'm down 2.3%. Like, bro, I'm chilling. I'm absolutely chilling. I want to buy more. I want this to go to like 50 cents. Everyone panics, and then I'm gonna be. Imagine how much money I'll be making.
1,300% yield on dividends every year.
The thing is, guys, we're laughing, right? Like the general overview is, it pays a lot of dividends due to the volatility of Bitcoin. I'll let Sam explain it a bit more. However, if this actually goes to zero, right?
That's not good.
Yeah, like I'm screwed. All right. So like, I don't care. Like I'm going down with this ship, and I'm gonna keep like buying the padding for the ship. And then if I die with the ship, I'm dead anyway. So I don't care. I'm dead in the water, guys. Like there's no coming back from this. So
that's a really good analogy. Yeah. So just for everyone that doesn't know, Stretch is supposed to be $100. It's a preferred stock from MicroStrategy, the company that owns almost 1 million Bitcoin. And basically what it is they realize that they'll probably get more than 12% return on Bitcoin. So they're selling these shares. You get an 11.5% dividend yield, so almost 1% a month. They're taking your money and they're going and buying Bitcoin with it. So if they can get a 15% return and they're giving you 11.5%, they get the extra 3.5%. Is basically how it works out. This is their preferred credit instrument, is basically what they call it. It's grown really quickly. I think it's like a $15 billion market cap or something like that. So the problem is, though, it's been depegging. It's instead of $100, it's at 83, which causes some people to feel uncertain about MicroStrategy, feel uncertain about STRC, which causes it to go down further. And a lot of people put money into this because they thought it was a pretty safe way to get 11.5%, which we've talked about this before. There's no safe way to make 11.5% dividend yield.
Yeah, the fact that he sold it as safe is I do have a big problem with that.
I'm gonna spin it back to that in a second, Connor.
I'm okay.
Talked about this.
I'm okay trading something that doesn't I'm trading the fact that I don't think Bitcoin's going to zero. Like STRC is depegging because also Bitcoin is going down right now, and people are panicking because they think this is going to be the unwinding. This very much could be the black swan event that continues the bear market, makes Bitcoin significantly lower. However, if Bitcoin doesn't go to zero or doesn't go to like 10, right, MicroStrategy isn't going to blow up. And if MicroStrategy actually doesn't blow up and we do actually get another Bitcoin bull run, right, then Stretch will go back up, or it will just continue to pay the dividend. So like I'm trading that side of things. I still don't like at all that he sold this as a it's actually kind of in spite of the fact that he sold it, right? So he sold it as safe, and I'm trading it in spite of the fact that he sold it as safe.
And to be fair, it wasn't just safe though. Like, because we can say Bitcoin is safe, and I think that's a fair thing to say. It was more like this can be a bank account. This can be a money market account. I'm like, whoa, that's not what that is.
But that's why it's deep. That's why it's depegging.
Right.
So do you see what I mean about the trade?
Yeah.
I don't mean to interrupt, but like that's the
No, yeah.
reason it's depegging and the reason why I think this is an opportunity, right? Because the only reason it's gone down, I don't believe it ever would have gone down this much if he didn't sell it as a bank account, right? No one would be panicking, because if he was like, guys, this isn't safe, right? It can go down 20%. But I'm basically trading the idea that it will bounce, right? That's what and it's down overly. People are overly worried because loads of people bought it thinking it was stable. So that's why it's panic. That's why it's depegging. That doesn't mean that the system won't work, though. Do you know what I mean?
Right.
The tough thing is it's really hard to find good numbers on STRC and MSTR just online, because they get mixed up in a lot of different ways. Like the market caps are wrong. So right now, what I can tell is the market cap of MSTR is 37 billion or something like that. The enterprise value, basically what their Bitcoin is worth, is about 51 billion. So there's a $14 billion mismatch where it's being priced less, but they have this big STRC commitment where they basically owe dividends on STRC, and that's worth like 10 to 15 billion. So that's where there's like a big difference. The thing is they've been selling MSTR to build up a cash pile. But now people realize in MSTR that they're going to continue to get diluted, which is why it's down 7% today. So every time that's down 10%, like their market cap goes down $3 or $4 billion. So it's harder to dilute, which means it's harder to repeg STRC. So, and they could be the ones selling today, I suppose. They could be selling $1 billion worth of MSTR today to try to like repeg STRC. But it is this kind of spiral effect where people are worried that they're going to get that they're going to be diluted. So then they can't dilute. So then they can't repeg STRC, which means that people are more worried that they're going to dilute MSTR. And it's like,
they could also be selling Bitcoin
if everything continues to crash. But
like I think that he was testing the water when he did the small sell. So like he was testing the water to see if he could plug the gap, because I reckon this was always part of the plan. If it depegs, we're going to sell Bitcoin. Like that's what seems to be. And that's why everyone, like, because at the end of the day, it's the same as the Micron thing. People are in Bitcoin because number go up. So now number go down, they're selling, right? They're panicking because they don't realize everyone's first cycle. They don't realize, just like me, they don't realize that number go down. You don't get MicroStrategy doing 3,000% upside when Bitcoin only did 600% without exactly this playing out, right? And that's like the thing is I'm willing to take a bet on this with a smaller position of my portfolio. It's nowhere near all in at all, right? We're talking 5%. Like I'm not even 5%. I'm talking about Bitcoin, right? 10% overall. But it's like I'm banking on this being short-lived, just like it always is. But also it can go to zero, like, and I'll be fine. But this is a trade that I believe in myself. I believe that the world actually misprices Bitcoin because they don't see value in being able to have sovereignty over your own money. And I think that is solely the benefit of Bitcoin. You know, everyone's like, there's no use case, there's no yield, it's not a business, blah, blah, blah. And the simple fact, not me, but someone, right, can put $10 million and have it in their pocket, even though we know it's not in their pocket, but have access to it in their pocket and go through airport security and no one would ever know. I think that alone is enough. And the fact that MicroStrategy's market cap is only 50 billion or 38 billion or whatever it is, just like Elon Musk is worth $1 trillion. Do you know what I mean? So it's like the amount of money that's out there and the ability to move it is what makes me bullish on Bitcoin. And that's it. Like there's so many other things, sure, but that's the reason I'm bullish on it. And that's the reason why I think it's going to come back. And that's the reason why I think the market is mispricing it, because you can't move the amount of money that people have, right? Do you know what I mean? Even if it's just this like, you know, unknown money, you know, from wherever, from whatever sanctioned country, from whatever, like, you know.
Yeah, you can't go to a bank and then send it wherever you want without a bunch of questions.
Yeah. And I'm not saying that Bitcoin is only for criminals. There's completely legitimate people who also don't want to put all of their risk of their worth in, you know, the hack. Because the thing is like when you get to a certain level of net worth, you start to think, okay, well, $1 million in a bank account, right? I'm only insured up to a certain amount. Do I trust this bank account? Like I'm reading news articles about, you know, insert bank account here doing the wrong thing. Are they going to get, you know, in trouble from the government and then close down, and then is my money safe? Do you know what I mean? So it's like there's such, I think there's such a value in just, even if it is like 1% of every single person on Earth's net worth that they just wanted to keep safe. And the way I think about dividends, like that amount of money is so huge. And I think right now, no one, you know, the world as a whole is not pricing Bitcoin with that as the value.
I definitely think people underappreciate how convenient or how valuable convenience in itself can be. Because if you think about a lot of the companies that have gained a lot of traction, just to look at it from more of a company basis, so many of the things on Earth over the last 25 years that have really gained a lot of value are purely because they're convenient. Whether it's Uber, whether it's like DoorDash, whether it's AI and having AI assistants, we're all moving in the direction of things just being as convenient as humanly possible, which is a good and bad thing, I guess, in some capacity. And I genuinely just feel like crypto is one of the things in the world that makes certain aspects way more convenient. For example, I bought a watch yesterday, and the guy was like, do you want to pay in cash or do you want to pay check, wire, or crypto? I was like, I can pay in crypto. He was like, sure. And so sure enough, I think the watch was like maybe $5,200 after tax. I just sent it to him in stable coin. And that was that. Just the whole transaction was over with. I was like, oh, this, and IRS, I did report that. Thank you.
That's what was making that face.
I did pay my taxes on that one, by the way. That was from Coinbase. You guys got me on that one. But no, all jokes aside, yeah, I was able to just pay for it. And it made my life so easy. I was about to go to the bank, and it's just nice. And so I completely agree on a bit of a side tangent. That sort of thing is underappreciated, which is a part of the reason I still invest in crypto. And I've also made it clear, the market's crashing. We are in a bear market. I am 100% convinced we're in the buyer's portion of the bear market. There's no convincing me otherwise. I think the next 6 to 8 months are going to be some of the best possible times to buy crypto. Good cryptos, obviously. So it makes a lot of sense to load up. You know, one question I did have, this is spinning it back to the stock world a little bit here, is SpaceX for you guys. I don't know if you've been watching how this debacle has been going, but that bad boy IPO'd at 135. Opened up right around 160, ran to 225, and is now back at $159. From peak to now, we're down. SpaceX is down 29% from that all-time high.
Can we go back to MSTR for 1 minute?
Yeah. We'll spin it back here then.
Yeah. Just going back to the convenience thing too. Amazon, all about convenience. Even Meta, like convenient. Like we have a neighborhood group. It's so convenient versus going house to house to house and everything. Like almost every company's convenience, especially in this age of wealth. Like it's not Pepsi that's running the S&P 500 anymore, and that's not maybe convenience. That's like a staple. But going back to MSTR just for a second, I kind of feel like this STRC MSTR debacle is going to be the bottom of the market, like peak fear. Because they're talking about like the option is that unwind their million Bitcoin basically on the open market. Like that's what people are fearful of. And I was wondering what would kind of bring us there. Like what would bring us to the bottom of the bear market with peak fear? But then my question is, like, what can they do to repeg everything? I guess they could just leave it, right? Just let it go down. It's not like they have any obligation except for the dividend payments, which they don't even have to pay. Like if they didn't want to, they don't have to. They can lower it. But I think they could kind of let it fizzle out, whatever. One thing, though, that I think they could do that would invigorate the market is they just say, we're no longer going to buy OTC, which is where they go and they like find a willing seller through an exchange. And then it doesn't like cause the market to go down and up. It just like smooths out the sellers and the buyers. A lot of people are pissed off that they always do that because it doesn't force the price to go up when they're buying a significant amount. I kind of look at it as like smoothing it out though, because those are probably people that would sell. So then we'd see a dip and then a jump right back. But I think a lot of people would be excited about that just on surface level, that they're going to go buy hundreds of thousands of Bitcoin just randomly at Coinbase from the order books. And I wonder how much that would excite the market. And if the market goes back up, obviously, then it will help STRC repeg. It will help Bitcoin go up, which increases MSTR's price pretty quickly. I think we would see a huge jump and convincing momentum if they just said, we're just going to buy everything right off the order books. Like, you want to sell to us, we'll buy it right away, and we'll force up the market for the next 5 years.
Well, they would definitely dry up a bunch of reserves if they did that, because a lot of these exchanges don't have that much Bitcoin left. I mean, there's a decent amount. They can sustain it for a little while, but not a long time. And think about that narrative. MicroStrategy's buying all of the Bitcoin off all of the exchanges. You're not going to be able to buy any more next year. And then starts to turn. I could see that. I could see that.
I think, yeah, but again, that's like a short-term fix that, because one, I'd probably sell into that, because I expect that to be like just a nonsense story that everyone gets excited about and then we crash. I understand why people are like, oh, I wish they would buy on the open market, but there isn't that much Bitcoin on the open market, right? Like, I think people underestimate how much is actually on exchanges. So I think like the veracity of the actual buying on an exchange, like one exchange like Coinbase, and the more so the news, way more so the news of doing it, how quickly that would increase the price, which in turn is actually counterproductive for strategy and micro. Like, yes, it increases the price of the Bitcoin that they have, but then they'd probably be incentivized to sell that Bitcoin. Do you know what I mean? Like, they want Bitcoin at a cheaper price, so buying it on the open market isn't that. Like, they're gonna shoot themselves in the foot. That's kind of how I would see it. Now, whether or not that's the case, right, it remains to be seen. But
yeah, I just wonder like how many cycles they're going to go trying to accumulate as much as possible versus just pump up the price. Like, can they arguably get 2 million Bitcoin? Like, why do they have to keep the price so low for so long?
Yeah.
Especially when they're accumulating as much as they were with STRC before it depegged. Like, they're buying 30,000 Bitcoin in a week. It's just like, why not pump up the market? And then like eventually they can say, oh no, we're going back to OTC, when like they've already accumulated a lot more Bitcoin. But I think MSTR would pump up so fast in that scenario too. I don't know. It's something interesting though to think about.
Yeah, definitely.
And all it takes is a narrative. That the truth is, all it takes is one narrative for the market to run with. Because think about it. I'm looking at it now. From Friday, June 5th to Monday, June 15th, 10 days, Bitcoin pumped 14%. For almost no reason, to be honest. It kind of just did it in return. So if you don't think Bitcoin can pull out a 60-70% climb out of nowhere for a good enough reason, it absolutely can.
Just give me a Black Swan event.
Just get it over with.
Michael Saylor, just run it up, my G.
Well, according to the calendar, if a Black Swan is gonna happen, it'll happen in like 3 months, because that's usually when they happen, like 4 months from now.
What I like about it is it seems ridiculous, right? But probably we're going to bottom at exactly the same point that we did last time. However, it's not going to be in the way everyone expects. So, for example, everything goes chaotic. Michael Saylor announces today he's selling a ton of Bitcoin, right? We're gonna go down loads. That's gonna unwind MicroStrategy more. It's gonna unwind STRC more, right? Eventually, we're gonna find a bottom wherever that number is, and then we'll probably do nothing. We'll pump up again, and then in October we might just get a vroom, right? And then no one will realize that's happening, and then we'll be in the bull market again. Everyone who just held on, nothing changed. STRC's paying dividends. MicroStrategy's pumping with Bitcoin. Bitcoin's pumping. And we look back and go, hold on a minute.
That was it.
The exact bottom was on the 5th of October again. Right? That's the sort of thing that happens. Or just, do you know what I mean? It's like,
you know what day I'm terrified of as a crypto investor? When October 9th comes around, I feel like I'm not going to be able to sleep that night, because I'm like, what if 10/10, we get another one, just right back to back, 2 years in a row, the nastiest liquidation event you can imagine.
12/31 is worse, because you have to realize that you have to figure out all your crypto taxes.
Oh yeah, I'm so excited. I'm so excited to let them know how much I lost this year.
Yeah, I haven't done anything besides just buy ETFs this year, really, and a little bit of trading. But like, yeah, I've been keeping it fairly easy this year. So
yeah, have y'all bought any crypto? I do want to spin back to SpaceX because it's funny to talk about. But have y'all bought any crypto in the last week since the last pod?
Only STRC.
I just want to know when to buy STRC. When
I think like buying STRC, buying MicroStrategy, buying Bitcoin, like in a moment where we are right now. Why would I bother? Like, I did buy Sui and Solana like 2 weeks ago or whatever, right? But in this moment, right, where everyone's panicking, tell me a reason, and I'm genuinely asking, why would I buy an altcoin, right? That's in the crypto market that most likely isn't a business or anything like that, right? Why would I bother when I could buy something that's more beaten down than Bitcoin, but is based on Bitcoin that is a business, right? In the same idea, like surely that's the same thought process as buying an altcoin right now, right? So why wouldn't I just buy MicroStrategy? Do you have any
I feel the same way. Like it's just, I feel like most altcoins are crap. Like 1 or 2 will probably actually get usage, but why do that versus Bitcoin when I don't know which one's going to do well? And I have a hard time with STRC too, because I'm like, ooh, 13% dividend yield and 18% appreciation if it repegs. But then I'm like, or just buy Bitcoin and then I don't have to deal with it, and then it'll probably be fine and triple in 2 or 3 years. So it's like it's the same risk or riskier than Bitcoin with less upside. So I have a hard time with it. But it could go up 13 or 18% much faster, I think, than Bitcoin. Like it could repeg next week. I don't think Bitcoin's
That's sort of the play. Yeah.
I guess I'm the only one. So I did actually today, like maybe couldn't have been 45 minutes ago, like 2 hours ago, I added to all of my long trades, added to my Bitcoin, ETH, Solana, and XRP long trades. I'm down about 19% on average across those. They're on 3x though. So they were basically break even last week and now they're down a bit. But I did add to all of them. I think currently I'm now at 18% capital allocated towards what I put aside for these trades. So I still have, over 80% of my capital ready to invest, because I can very clearly see a world in which Bitcoin does fall into the 50s or even high 40s at some point. But I am just in a position now where I'm like, I have no idea. I don't know when the bottom's going to be. So if I think it's getting close, I'm just going to start now. But I have been doing some allocating there. I will let everyone know who is watching this. I personally, and I know these guys do as well a little bit, do the vast majority of those trades that I do over on BTCC. We do now have a partner link with them, sponsor of the podcast. So shout out to them, in which if you guys do use our link, the Open Wallets podcast link, you're going to get a ton of great bonuses. For example, if you do deposit, you can get up to $10,000 in bonuses while also getting up to 40% lower trading fees at the same time, which is a great dual benefit that you get from there. And then once you actually do start trading, you get a whole bunch of different volume bonuses as well. And maybe Sam can tell you a little bit more about how valuable that can be, because I know Sam has experienced that a good bit, but it's phenomenal. And in some way, it can even be a way to take a more risk-free approach to, or there's less risk as you do, of course, trade, because you are getting some of these rebates and things like that, which is obviously fantastic. In this sort of market, this sort of crypto market, I think taking advantage of whatever bonuses or volume rewards you can get is amazing. And that is why, of course, I hold them. As I mentioned before, I'm holding my long trades open throughout the whole rest of the bear market. That's my plan. So I needed a platform that gave me great fees, and so I chose BTCC. But yeah, so I just wanted to make sure that you guys saw that. And maybe again, Sam, if you want to tell them a quick second about those volume bonuses and what they can be, because it's really dang on good.
Yeah. Well, now's the best time to open up a trading account, which is when the least people want to do it. But yeah, if you get a 10% deposit bonus, then you ride the trade up, you 3x Bitcoin, it 3x's as well. Let's say you did it at 50,000 and then we go to 150, just barely above all-time highs. You basically get like 100% because you get a 9x and then you get a 9x on your 10% deposit bonus. So you basically double whatever initial money you put in. Obviously easier said than done, but I plan on doing the same thing. Like I have some long trades open now, but October comes around, we're around 48 to 50,000. I'm going to 5x those trades at least, and then continue doubling down. And I say 5x the trades. I'm going to increase the size by 5x. I'll still have 3x probably positions because at 48,000, we would have to go down to 32, if my math is right, for me to get liquidated, which I don't think is happening. If it does, then okay, I'll open another 3x, and then we have to get down to almost 20. Like I don't know. I feel very comfortable with that. And I'd rather do that than invest in altcoins, because it will definitely outperform Bitcoin. Usually outperforms alts. So then 3x on Bitcoin is crazy if you can do it towards the bottom, which I had a couple trades last bull market, even in the middle of the bull market, there were 20x trades on Bitcoin. Like I made 20x in a couple months. So if I just kept them open from the bear market, I would have been very happy. But I guess
I had a low amount of money. I think it was like 1 or 2K on 20x from $26,000 in the last bull market. And I kept it all the way up until plus 100 and then took it. Like you can take relatively small bets and make a lot of money. However, of course, the risks are real, right? That money is money I can afford to lose. So I'd never use money I can't afford to lose. But the opportunity is there, especially when the exchanges, in moments like this, they're willing to give these bonuses, right? When we're in a bull market, you're not going to get bonuses like this. So.
Yeah, 100%. And
yeah, profits from trades rather than bag holding Bitcoin, and you have to go to wherever you keep it and then withdraw it and then put it on the exchange, and like it just is much more difficult, which is good and bad. But I think it makes it easier to take profits throughout a bull market if you're also trading.
Yeah,
10 seconds each. Go.
Yeah. I have to because I'm just so curious. Conor's the only one here degenerate enough to buy SpaceX at this level, and I just have to know if he's doing it. I can't sleep until I know.
Nah.
Oh,
the thing is I don't know. It's a tough one. Like I did actually do a long position at the first crash, but I got stopped out in case we bounced. I'm willing to trade the futures price. Like, today, depending on what's happening, like maybe I'll do a long on the futures price. But like, yeah, for me, it's just like, it's just overpriced. Like, do you know what I mean? Like it was overpriced when it launched, it's overpriced now. Like, I don't know. Like it's a strange one because I find it hard to explain why I'm like not bullish on Tesla but I was bullish on Tesla back when COVID hit. Do you know what I mean? Because like it made sense. Like I don't like things that don't make sense. So like I can be overly bullish. Like, STRC sounds like, why would you do that instead of buying SpaceX? But I'm like, the thesis around that makes sense to my degen brain, right? But the thesis around, like, I get what SpaceX is doing. I get where they could go. I just don't think they're there right now. So I just don't think it's a good idea. And like, thank you. I'm so glad because like I would have got annihilated. Like we were saying it. People are saying on my stock channel, like, this guy's an idiot. Like this is a massive company. It's going to continue to rally. And like, yeah, it might, but then I have to deal with the volatility that we're seeing right now with something I don't actually believe is worth the money it is. And I think that's kind of, maybe I explained it myself. It's like, I believe in Bitcoin and I believe that Michael Saylor isn't going to blow this up. So I believe that. So therefore, taking a degen bet on that is actually cool. Like that's fine for me, right? But I don't believe that SpaceX is worth it. I don't believe that Tesla is worth what it is today. I just don't believe it's worth that. So like whether or not it goes up, it doesn't really matter to me. Like I'm like, well, I missed it. We can't be right about everything.
Yeah, which I think that's fair. Someone in the Discord actually said the other day when SpaceX was at like $210. They messaged me. They were like, Tyler, do you think now's a good time to buy SpaceX? And I just asked them, I said, why didn't you buy it when it launched? And they were like, because I don't really think it's that good of a company. I was like, oh, so you want to buy it now that it's up, but you don't like the company? I was like, does that sound a little backwards to you? He was like, I can't remember his name. I'm not going to name drop him, but he was like, yeah, that's a fair point. I'm going to sit this one out. It drops to 160. He texts me and he was like, bro, appreciate it. Send me your Venmo. I was like, no. I was like, first of all, you're not paying me to give you any tips.
Here's my Bitcoin account, though.
Yeah. Sam, are you kind of in the same boat?
Yeah, I just feel like if we go through a bear market, it could go down a lot. Like if, SpaceX isn't in a super profitable industry, like Amazon is considered safer, I think, than SpaceX. So imagine like it was at the same price to sales as Amazon. Amazon makes $700 billion a year in revenue and it's selling for 2.6 trillion or something. So it's like 4 times sales. Even with SpaceX, all the new contracts and their Neo Cloud and stuff, if it's sold for 4x sales, it's a $200 billion company. Yeah. Which is what it's valued at like a year ago on private markets. So like it could go down to $15 if it goes down 90% like that, which I'm not saying it will. It probably won't because there's more potential there maybe than Amazon, but also Amazon's highly profitable. It might not show it, but they make a lot of operating income. They just spend a lot back on their business. But say we go through a 2-year bear market or something bad, like SpaceX is going down 75, 80, 90% easily. I think they could also 2x, but like I just don't think they're that close to doing anything that's really in this like the space world versus just like selling more Neo Cloud and like satellite internet and stuff like that. But I don't know. There's no point in buying it in my mind when you have so many other profitable companies that are also just going to be massive.
Right. It's like Meta. Same thing. Right. I get it.
Just buy Meta and Amazon and then retire.
No, I mean like SpaceX is just like Meta. The same thing,
Yeah, basically, blue chip company, super profitable. distribution to 4 billion people. Yeah.
Right. Same thing.
Yeah.
Cool, guys. Well, we have a couple things that we'll definitely want to touch on next week. So tomorrow we have core PCE data coming out. That's inflation data. It's obviously going to be important for both markets. We have the Russell Recon. I think the Russell Recon is on Friday as well, which is where they kind of reshuffle and kind of reallocate all the funds to the Russell, which is obviously, that's usually one of the higher volume days of the week. That's going to be on Friday. Today we have Micron earnings. All of this is going to be impactful. So we have a lot to talk about next week. And so hopefully in the meantime, Stretch doesn't blow up and hopefully Micron doesn't come out and blow everything else up. Maybe we need to do an emergency podcast if something terrible happens by this weekend. So if you guys have been, of course, enjoying and watching the podcast every week, we appreciate you for tuning in. And yeah, maybe next week we get to not have Conor. So that'll be fun. And then, yeah, we'll just go from there. But anyway, we appreciate you guys tuning in. We'll see you all in the next one.
Peace.